And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Thursday, October the 21st. We've survived October the 19th and the memory of what happened in 1987. We've got things looking actually pretty decent as far as our equities are concerned. We've got a late spike in crude oil this morning that might offer us some opportunities here as we get closer to the open. My name's John. Thanks for joining me and trusting me with your time this morning, as always. We're going to try and find some accurate context for everybody this morning. Markets are ambiguous. We never know what's going to happen. It's good to see everybody this morning. As far as economic numbers are concerned this morning, 7:30, the jobless claims just came out. They were looking for initial jobless claims of 300,000. It came out 290,000. That's good news. There's a little bit of an increase in adjustment of last week's numbers. Nothing tremendous. Continuing jobless claims were expected to be about 2,550,000. It was 2,481,000. So also maybe some good news as people are starting to perhaps get back to work. We had the Philly Fed number come out this morning, a little lower than expected. We were looking for 25, came out 23.8. Still waiting for existing home sales, which is expected to be somewhere north of 6 million. And then, of course, misleading indicators also at 9 o'clock Central this morning. 9:30 for all you nat gas traders. We'll be looking for those numbers to see how we are doing as far as stocks are concerned in the natural gas. Nat gas really finding a magnet around the weekly kickoff low. It's really kind of hanging around. I see Spencer kind of talking about how it seems to be cramming into the tip of a wedge this morning. Is really in a kind of critical area. There's a lot of information there. There's a lot of confluence in the area where it is currently, or last I looked, trading. So we're going to be looking to see if we can find some decent opportunities in and around that area, of course. As far as earnings are concerned, Tesla came out with their best quarter ever, but price seems to be struggling under pressure of the high valuation that everybody has on that stock. IBM misses on earnings and revenues last night. We got a very long list of earnings this morning. And this afternoon, standouts this morning, AT&T, standouts this afternoon, Intel, Snap, Whirlpool, and Mattel. Mattel is a stock that's come on my radar lately because I'm sure that they are really going to be suffering in the next quarter due to the supply chain. I think they're depending a lot on China for the manufacturing of a lot of their toys and stuff. So it's going to be interesting to see how that plays out for everything. The former president Trump announces he's establishing a new social media platform. It's going to be called Truth. More deets to come. COVID lockdowns have hit Russia. They're going to shut down apparently Moscow, the entire city, for an entire week. All businesses closed. Everybody expected to stay home. United Kingdom, the UK, denies plans to reintroduce prevention methods. So we're still fighting that. Of course, we're all well aware of that, and we pray for everybody's safety and health. Make sure you like, share, comment, question, feedback, heckling are always welcome. Subscribe to our YouTube channel. And taking a brief look at the VIX, the dollar index, and the 10-year yield this morning. The VIX up 3%. Get this, up 3% at 16. 16. Still a very low number for volatility. We're not seeing a lot of volatility in the equity markets here so far. The dollar index up slightly, 93.67. 10-year yield largely flat at 1.66%. Going to say good morning to everybody. Always. Ednelson, first in the room. You win the prize. Spencer, good morning. Janus, Vince, good morning. It's a great day to be alive. I love that positive attitude, Vince. Theo, good morning. Chris, Spencer, waiting all week for my funded account to be ready. I'm still getting up and doing my market analysis every morning like I'm going to trade anyway. Very good idea. Just get your head wrapped around where you're going to be. It's just another step more difficult as far as making the hard decisions we have to take in trading, but the process is the same. Felix, good morning. Jorg, Brian, Chris, talking to Spencer. That's why I like the option of the pro account. Alfred, good morning. He did the pro account. It's definitely the way to go, but it won't take 1 to 2 weeks. It shouldn't be much longer for you to get your account. As long as you've, of course, put in all your paperwork, which I'm sure and I know you have. But I'm still making trades by marking an entry on my chart when I see a setup. Spencer, yes, Natty is cramming into a tip of the wedge this morning. Spencer, one little suggestion for you. While you are just kind of trading practice, sim, whatever you want to call it, make sure it's deliberate practice. Don't just start taking trades because you know it's sim. Act as though this actually matters so you can really kind of steel yourself to be even more prepared for when you do get your pro account, your funded account. All right, Robert, good morning. Nelson, Zerain, Tova, Charles, the NQ is range bound, it seems, and the ES has gone on holiday today. Is gold making $10 moves? What month are we in? Well, gold should be in December. We should be, yeah. Well, yeah, I think you're kind of saying that maybe we're a little not volatile, like almost like it's a holiday. Things are going to change. Be sure of that. Make sure you're ready. Make sure you're prepared. It does seem as though we've got a little lack of volatility, but there's still so many uncertainties out there in the world and in Washington and with COVID and everything. Things are going to be changing. Harry, good morning. Jerry is awake. Good morning, James, Rob, Daniel, Chuck, Stephen C, Jerry, Gratz, Spencer Rhodes. Yes. Okay, Spence, good. And Isaac. It's all right. It's always a pleasure to see everyone. So we had 2 group coachings this week, and we have always some really good, challenging questions. Our good friend Fred Decker always comes up with some ideas and some thoughts about things we talk about in the forecast and things that he's looking at in the markets. He's a disciple of the market profile, much like me, so we speak the same language and we try and help everybody kind of learn that language as we go over time through the forecast and through the group coachings. So it is, when we started the market forecast, everything was very simple. And over time, I've tried to add more and more kind of important information, more and more contextual information, if you will. And if you have questions about it, don't hesitate to ask. We've started the forecast earlier for that reason. If you have questions about things that we're talking about or terms or tools that we're using, don't hesitate to ask. But now you also have 2 times during the week where we can sit down for an hour and just talk and ask questions and answer questions. So I'm really liking the idea that we have 2 group coachings and that we've extended the time that we have to look at these charts. And speaking of which, I'm going to stop yammering right now, and we're going to jump in and start looking at crude oil. As always, we start with the daily and crude, just going left to right, no particular order. Everybody knows the rules. 1 bite each. So obvious. We don't have to know markets to know that price has been very steadily moving to the upside in crude oil. Open interest yesterday on this most recent push to the upside was overall only 4,000, but it's more like 20,000 because 16,000 of it was evaporation of the November contract. So we saw some pretty decent volume on the upside move yesterday, and we added some pretty good open interest. That's what tells me that an auction is healthy to the upside. Healthy to the upside doesn't mean that we can't find a vicious pullback. Those are always part of a very strong move in one direction or the other. But if you take a look at this, the structure just kind of speaks for itself. I'm, again, always on alert for the vicious pullback when we have a market that's moving in this direction, in one direction. Sometimes the opposite moves are very fast and, again, very vicious. So doesn't change my bias to try and buy weakness. I mean, this market is obviously moving higher on demand and perhaps lack of supply. So, I'm sure a lot of you are hearing scary things like $10 and $20 a gallon gasoline. And, of course, we are all very hopeful that doesn't happen. And we are also well aware that we have the means to make sure that it doesn't. Could we see $100 crude? This move is easily measured up to $107. That's just on a chart. We have to see what happens. My thought is, as long as we continue to put up higher highs, we're going to look to buy weakness. 30-minute chart. Okay, we have a late spike. So here is yesterday's move to the upside. Pretty decent open interest and volume on this push to the upside. We finished the day with a late spike to the upside. Settlement is 83.42, right at the high of yesterday's late spike. And we are currently right at the base of the late spike. We're in range. We're in value. We've got a little bit of overnight inventory to the short side. A little cognitive dissonance. Is this going to be somewhat of a blow off to the upside? Are we setting up for a pullback? We certainly got some repair down below. There's lots of different weaknesses that we've left behind as we've moved higher and higher. But is that going to matter as it continues to go higher? No, it's only going to matter if we do find some sort of a pullback. So we're sitting here at point of control, at the base of the late spike. The late spike rules. If we open in or above the late spike, that's acceptance of higher price. We open below the base of the late spike, that's rejection of higher price. And it looks like we're opening right at where that base of that late spike is. Now, there's some discussion as to whether the base of the late spike is where the breakout occurs or where the bottom of that breakout bar is. Take a look at this on the TPO chart, the market profile chart. So here's the profile from yesterday. Here's our late spike. The market closed in the late spike. It closed as the market tried to push higher. The market did not have time yesterday to accept price at that level. So we close where we open today is vital. The base of the late spike, some would say, is here, and sometimes that's going to be right. Some would say the base of the late spike is here, and some would say that that's going to be right. So if we're going to be looking at this as the base of the late spike, we want that to be supportive. We are just opening up. We're starting to populate the profile here, and we've got a pretty sizable opening range. And of course, just to complicate things, it's going to span the potential base of the late spike, which could be right here, or is it here? Are we rejecting higher price because we're opening in the body of yesterday's profile? Always questionable. Things never seem to happen twice the same exact way. So as long as we aren't getting into this part of the spike, I'm looking at this as potential rejection of higher pricing. I'm either going to look for opportunities to get a short that I'm not going to fall in love with because we know that the bigger picture is to the upside, or I'm going to stay patient, let the market establish a range and work the bottom of that range to buy the market on a weakness. Here's the 1 minute chart. Let's see if it's populating my opening range. And it is not. I don't know why. Tiki, opening range trade. Well, here is our opening range anyways. The low, 82.84, the high, big 83.08. So we've got, a 24 tick opening range. Oh, here it is. Now finally we've got it. Okay, I guess I was on the, this is the wrong bar to be populating this on. It should be on this one. I'll fix that later. Fixed it last night. It unfixed itself. So what kind of context we're looking at is, are we going to accept inside the late spike, or are we going to reject it? All of it is inside value. Not seeing a huge reason to try and push myself into any particular trade right now. I mean, we're at point of control. This is the fairest price from yesterday. If we're going to reject the late spike, leaving the opening range at the high of the session, that might put me into a short, but one I'm not going to fall in love with. Again, it's against the contrary. It's a contrary move to the bigger picture. Let's move on to the E-mini S&Ps now. I feel like I've yammered enough about crude oil, but I always like to catch that open. Okay, weekly kickoff breakout fails to test all-time highs yesterday. Did we kill it in volume? No, not really. Did we increase open interest? No, we lost open interest. So we're still faced with this situation where we're not bringing in any big volume on the upside. That doesn't necessarily scare me, because that's just how the S&Ps are. What makes me nervous is the fact that we're not building open interest as this market continues to move towards all-time highs. Now, this week I started the week with a short bias. I held myself. I didn't do much until yesterday when I did finally catch a decent trade. But I'm always thinking about, where is the biggest point of pain? We've come a long way this week. 45.20 weekly kickoff is now going to be pivotal. I mean, we're trading basically right there now. We're going to be opening in about 25 minutes. So that open interest lower at an all-time high doesn't necessarily give me lots of confidence in direction and how good of a job the market is doing getting there. It's been a quick move up there. We can't deny that this market is extremely resilient, but I'm still feeling like there's something hollow inside of me, inside of this market. So I have to trade what I see, Or if what I'm seeing isn't what I'm thinking, then I'm going to probably be a little bit dizzy and not be all that active. But we've got an important spot up here. We've got an important inflection level. This weekly kickoff high. Let's look at the 30-minute here. Okay, we just want to point out a couple of things. We have a naked point of control above, which is from Monday, Labor Day. It was an abbreviated session. It's what put up our island top. Okay, this is this circle right here. That was Monday, Labor Day. It's an island top. We gapped to it. We gapped away from it. This looks like a bearish engulfing pattern, which technically said that the market was prepared for a pullback, and it's what we got. So, we have yet to be able to go up and check that naked point of control. I'm going to put this back on the 30-minute chart. Looks like I have something frozen here. Let me try and do something here. Yeah, definitely the chart is frozen, folks. Not on my platform, on my computer, but just in the studio switcher here. Let me try something. Let me see if this works. Close. I'm going to restart the program on the computer where the charts are to see if I can bring them back up. It looks like there was some sort of a problem with the program. Okay. All right, I think we've I believe resolved the problem. So let's go back now to the charts. And thanks for letting me know, and I apologize that it was so frozen. But it should be good now. All right. So here's the E-mini S&Ps. Let's start back here. Weekly kickoff breakout fails to test the all-time high. The all-time high, if you remember, was an island top, a bearish engulfing pattern. The market finally getting back up there to go up and test. Open interest lower yesterday, volume lower yesterday. New York Stock Exchange volume lower yesterday. So is the market really doing a good job? I'm always asking, yes, the market is moving higher, but is it doing a good job? I mentioned earlier in the week that the lack of open interest on this move was leaving a hollow feeling to me, which, had me looking at a short bias. But what I was seeing in price action and the profiles was saying, no, you don't want to sell this market. So I didn't. I really just started getting involved in this market yesterday, and okay day. Now, we're kind of at an important inflection level here, right? This 45-20 weekly kickoff is now going to be pivotal. Looking at the 30-minute chart, we've got this point of control up here, which is from, again, Labor Day Monday, the day that we left our island top that kind of put in the top that pushed us lower technically. And we've been, very strong on this move to the upside, but we've also left a lot of weaknesses down below and weaknesses that are within reach. So if we can't hold above weekly kickoff high, this 45.20, and this is going to be something that's going to be a little bit choppy for us today. This may become magnetic. Okay, so that means if we're going to use it as a long above, short below, and it just kind of rotates around weekly kickoff high all day long, we can cut ourselves up. But we've got a gap down below to yesterday. We've got a naked point of control. We've got another gap at the other end of the day before yesterday, and we've got a naked point of control. We've got another gap down below the day before the day before yesterday. Every day we've left a gap. In regular trading hours, we've left a gap. We've left every point of control unchecked in regular trading hours. This move is very strong. It looks strong. My question is it really? Did we really have buyers in this market, or is this just drift? Is this blow off? Is this short time frame? It's so difficult to know, and it's got me, on pins and needles as to, what's going to happen from here. There's plenty of cognitive dissonance in these markets all the time, and we can't forget how resilient they really are. There's downside weaknesses aplenty, but does that matter to the S&Ps? If there's no bad news today, we may just continue the grind higher and go back up and check that all-time high in the December contract was 45.3850. 45.3850. Right there. Not that far away. The point of control from that day, just down below it. I think it was 45.3550. Be patient. We are in range. We are in value. It's going to be fascinating. Even if we don't participate, I'm watching the S&Ps. I'm watching all these markets. Nasdaq now. Yeah, bad news is good news. No news is good news. Yep. How about it? All right. So to the Nasdaq, we had a pretty decent breakout above weekly kickoff high. The Nasdaq has been lagging behind the S&Ps as far as the opportunities, as far as price is concerned. I mean, we're within reach in the S&Ps of the all-time high. We're a little further away from that in the Nasdaq, but we have better information. We have an increase in volume yesterday. We have an increase in open interest, more of an open interest increase on this move to the upside. But we've still got a long way to go before we're going to be testing levels that the S&Ps are in. Weakness yesterday meets volatility and open interest, but it was still an overlapping to higher day. Take a look at the 30-minute chart here. See if we can find some interesting opportunities. We do have, almost did that. We do have still, some weaknesses down below, but nowhere near the number of weaknesses that we have in the S&Ps. Makes sense. S&Ps have gone a lot further and are a lot closer to the all-time high. Got a little bit of a gap here. We've got a couple of naked points of control. Another gap down here, but it's nowhere near as laden with visual targets as the S&Ps. Where are we here? Well, we've got settlement 15,377.50 right up here. Put that on your charts. No major inflection levels. Got a gap here. Gap was supportive in the overnight session. The market opening in range but below value. Do we have some overnight inventory to the short side? The fact that we're opening in range may give me a cause to look for opportunities as the day goes on. It doesn't look like we're going to be opening with any kind of a gap. We've got about 15 minutes before the open. So stay patient. Look for the right opportunities. Gold. Short time frame control still. We've got, a longer period of lower highs and lower lows here. We've got a short period of higher lows that we've kind of come into a wedge with. And I'm looking forward to seeing a breakout of that. I think gold has been a very tough market lately. And now it seems to be coiling. It seems to be getting a little bit of perhaps a directional move just outside of this coil. We still have weekly kickoff high and low, last week's high and low. I mean, all of this is still going to be barriers for us to continue moving out of this area of balance, largely this area of balance. So we did add 1,300 in open interest on an up move yesterday. Had pretty, a little bit better volume yesterday. So I'm going to be really kind of focusing on these extremes, this trend line, weekly kickoff high and weekly kickoff low for bigger time frame opportunities. I'm just looking forward for something to happen in this market. It's been a bit tough. Volume and open interest, day over day has been spotty. We have a big day, we have a small day, we have a big day of volume. We have a couple of even days of volume. Open interest has been up one day, down one day, up one day, down one day. Very indecisive, very short time frame controlled. Range-bound rules and breakout rules apply. When we get to the extremes of the breakouts, we fade them. If we break out and we have acceptance outside, we go with breakouts. It's very difficult to time, to sense. Even if you're not participating, if you are watching gold, see what happens at these levels, at these trend lines, and at weekly kickoff high and low if we get the chance today. We may still remain somewhat in short time frame control. Looks like we've still got our charts working for us. So the euro yesterday, I was kind of excited because we had a breakout. We had some decent volume, open interest on an attempted breakout. Yesterday we were above weekly kickoff high. I was kind of looking for a bigger opportunity. I was a little bit disappointed at the breakout of the neckline of this inverse head and shoulders yesterday, but it doesn't mean that it's not going to eventually work. We did lose open interest yesterday of 5,600. Some shorts coming out off these lows here, maybe some shorts coming off of taking some profits, but it wasn't all that impressive as far as momentum is concerned. Weekly kickoff high, 116.50, is going to be pivotal. Remember, be careful with that. Long above, short below can create very choppy losses. We don't want that. Take a look at the 30-minute chart. Okay, here was our move yesterday. We opened, we were above. I caught an all right move off of that, but it wasn't what I was hoping for. I was hoping to get through this gap, maybe come up here and check this point of control. We weren't able to do that. Well, I guess what doesn't happen and what does happen are equally as important. Today, we've got some overnight shorts. We're just magnetized towards this important inflection level, which does sometimes happen. Sometimes they're great to bounce off of or find acceptance on the other side of. This one seems to be one of those that, at least in the overnight, just chopped everybody up all night. Long above, short below, long above, short below, long above, short below. You didn't go anywhere, and all you did was chop yourself up. We're in range, we're in value. Maybe a little bit overnight shorts. Maybe there'll be an opportunity for us to get an inventory adjustment as long as we hold above that weekly kickoff level. To the 10-year. All right. We had a measured move from here to here. We're looking at that measured move now. If we can take out the low of the weekly kickoff level down to perhaps right about here. All right, so this might, upon acceptance below weekly kickoff low, this could be a decent target for us. Look at the volume yesterday. Pretty decent volume. We lost 1,600 in open interest, but again, approaching an important inflection level. You're probably going to be expecting some liquidation of some shorts. Perhaps some of those shorts ran into some sellers. This is what happens when we have an important level like this. There's a stack of buy orders down here. The more often we come down here and test that stack of buy orders, the fewer are going to be left. When that stack of buy orders is used up, that's when we get our breakout to the downside. We can get a good trade off of that, and we're going to start to put those longs under duress as price moves against them. So, this is a thing that can be happening right now because we've been adhering for one overnight session, another overnight session. What about the day session? We're going to get a good test of it in the day session. We are currently doing just that. We opened with a gap. Did we close the gap? Does it look like we closed the gap high 130, 15 and a half, 130, 18 and a half, 130, 15 and a half. We closed the gap to the tick after the open. We've got short overnight inventory against an important inflection level. This opportunity down here against this level is so cheap, even if it doesn't work, I would be taking it. Now we've closed the gap to the tick. That's not a strong high. If we can't take out this low, I would say a move back towards settlement would be a highly probable and logical thing for this market to do. I don't get to pick that though. Now let's take a look at the nat gas. I know we've been looking forward to seeing that. So we've got, a head and shoulders. We have broken out below what I would call the neckline. The measured move would be all the way down to here, but it does seem strange to be talking about natural gas moving to the downside as we were coming into the colder weather and seeing what's going on in Europe and in China with their struggles with energies. We were seeing some indecision here at this weekly kickoff low. Also last week's low. Okay, this weekly kickoff level has been here for 3 weeks, a month, and it's finally getting its due as far as being checked as an important level. Volume and open interest yesterday, both lower, as the market came back to retest after a 2-day close below this level, coming back to a retest on lower volume and lower open interest. We're going to need new business to come in to move this market and reaccept above this weekly kickoff level. And, it's a pivotal level now. A lot of these weekly kickoffs this week have become very important and very pivotal levels. Look at how the convergence of important information, this one's dead, this one we don't need anymore, but look at the importance that we're placing in this whole area here. We've got an important inflection level. It was supportive. We broke down through it, 2 closes down below it, coming back up to retest the level. Okay, we did close back above it yesterday. Now we're back down below it. This point of control, settlement, last week's low, weekly kickoff low, very important and, confluent area there. As far as, what we're doing today, we've got some overnight shorts. Have these consolidation levels been able to reconcile those shorts? We're in range and value from yesterday, which does look like a day that does perhaps require a little bit of repair. So here we are. We had about 6 minutes to go. We started 15 minutes earlier, and now I just keep yammering for longer. I do appreciate everybody being here. Spencer, I agree. Gold has been a very tough market. 1,600 in the 10-year is not a big number of change in open interest. Absolutely, that market is so big and thick. $1,600 is a little bit of a breeze. It's nothing to be that important about. All right, so let's take our deep breath. Be humble, grateful, and creative in your trading today. There will not be a recap today. We've got a big company meeting that we're all meeting for, so we will miss Dan today, and tomorrow being Friday, you'll miss him tomorrow, but you will see me tomorrow morning again for the market forecast, and I look forward to seeing all of you. So get out there and profit today. Trade well. I'll see you in the pit in a couple of minutes. Have a great trading day.